Hi, my name's Leon Rowe, currency trader and trading coach at trading180.com, and welcome to this week's supply and demand Forex technical analysis for the week starting the 10th of September 2018. If you are a new watcher, welcome, and if you are a returning watcher, then welcome back. And I hope you find great value in this video and my weekly videos. Also, if you want to skip straight to the pairs that you trade, the pairs are timestamped in the description box below, or you can just watch the whole video, which is normally between 30 and 45 minutes, and potentially get some potential trade setups on all of the currency pairs. So we're going to go straight into it, and we'll start off on the US dollar index. In the US dollar index, last week, we pretty much, week before and last week, we came up, bounced off of this area right here, and we're potentially creating a higher low. We're into this supply zone here. From a fundamental perspective, you know, the dollar really is the strongest currency at the moment, where the money is potentially piling in, and the Dow Jones dollar index is just a reflection of the dollar's strength or weakness against, you know, the major currency pairs like the pound, euro, and the yen. So you can see we've been obviously, you know, trending up within a wider potential range, and coming up potentially into this supply zone. Doesn't mean because we're coming up into a supply zone that we should be, you know, looking for short trades, you know, potentially wait for pullback. So if you do want to be a shorter of the Dow Jones index, what you would do is you wouldn't necessarily be short in this, you know, this index. What you would do is you'd be looking for price to really come up into this supply zone, and then look for price to sell off on the Dow Jones dollar index. And then you would go on to another dollar currency pair like the dollar yen, dollar Swiss, dollar CAD, etc., and then look for shorting opportunities on those currency pairs if you thought that this, you know, the dollar was gonna maybe there might be some profit taking around here, etc., right? And if you want to be a buyer of the dollar, what you don't want to do is be a buyer into potential highs. So you'd wait for potential price to, you know, pull back into a potential demand zone, and what you want to see is prices maybe make a new high, right? As we know that higher highs and higher lows are, you know, the strongest area, or I say higher lows are the strongest areas of demand. So if this makes a higher high, you wait for a pullback, as this would have created a higher low, and then you'd be looking for prices, you know, to buy around here. Obviously, again, just look at the dollar related currency pairs, and then look for buying opportunities if you're looking for a buying opportunity on the index. So let me get rid of these. So at the moment though, your first buying opportunity for the dollar is really if you're waiting for prices to come down here at the moment, and then you'd be looking for buying opportunities again on the other currencies. If you're looking to sell, again, look for some price action, and that should give you some confluence when you're selling on other dollar currency pairs. So moving on to the dollar yen. And the dollar yen we've had this week is prices have reacted. Dollar had some bullish news. It was non-farms on Friday, and there was some good numbers. Also, average hourly earnings were, you know, above expectations as well, which is always good. So the expectation of a rate hike for the dollar, we should see some bullish price action coming up. And if you manage to get in, you know, pre non-farms, which what you would do is zoom down into a lower time frame and look for potential support and resistance zones horizontal within, you know, the demand zone. So there was one here where you got support, bit of resistance, prices came down here, and this was where non-farms came out. So there was a 2 candle swing entry here, what I call a 2 candle swing entry here. And if you are entering just before the news, I would probably suggest that you just enter either, you know, a quarter position or maybe a half position, and you can always build in to your position once the news goes your way, right? If you're looking at a potential, if you were looking at a potential sell this week in dollar weakness, you can see where prices did manage to sell off, you know, this week. As I said from last week, some potential profit taking before some positive, you know, bullish dollar news. If you are looking to be a seller, then this is where you'd be looking to get short. If you're looking to get long at the moment, potentially you may have missed this, but if you feel that, you know, prices may go up to here, then this wouldn't be a bad opportunity to try and get long, to be fair, if you're looking to obviously trade off of the daily time frame chart, right? So we've just bounced off of this demand zone, and if you feel that, you know, price is going to go higher, then you've definitely got some decent risk reward. If you're looking at your entry on Sunday night evening, Monday, right, that would be your potential risk, depending on where you're going to put your stop loss. And then you have obviously some potential reward if you're trading up to the highs. One thing to be made aware of though is that the yen is a risk, is affected by risk on and risk off sentiment. So if we do have some risk off sentiment, right, coming into the market, Trump trade wars, etc., and an increase in tariffs, then the yen will strengthen, right? So you may see the dollar strengthening on other currency pairs, but with the yen and the Swiss franc, you may see it actually weaken. So again, this would be probably your first area to look to potentially get short. And we actually have, I think, actually I'm going to put it here anyway. We've got a little supply zone here as we've closed below, but we've gone below this low bearish candle. So if it does come up here, then this area here would be an area to look to get short if you're looking to get, again, long right now, or if you want a deeper pullback, potentially we're looking into this area here. And some of you may have the new watchers among you may be looking at supply and demand technical analysis basics, right? This is the basics that I go over when looking for a trade entry. If you want to know a bit more, you can watch last week's video and how I, you know, go about implementing this, the technical analysis basics regarding supply and demand. So, for example, who's taking profit, why there should be you know, more supply than demand, or demand than supply from a technical perspective, right? This fundamentals and sentiment pretty much overrule everything, but from a technical perspective, this is what you should be looking for. So just watch last week's supply and demand technical analysis video, and I go into it in a bit more detail, right? So moving on to the dollar Swiss franc, and dollar Swiss franc, it's like we're creating this double bottom type pattern, and again some bullish news for the dollar. So we're seeing some dollar strength at the moment. Prices didn't come down into this demand zone, which I was hoping it would. I really wanted to be a buyer within this demand zone, but nevertheless, what you want to do right now is potentially wait for higher highs and higher lows to be made, right? And if we do get something like this where we, you know, break to the highs, and what you want to do is wait for prices to come back into this higher low, right, before looking to potentially get long. A lot of people try to pick the absolute lows. You don't necessarily have to pick the absolute lows. You can just wait for a potential pullback after prices make higher highs and higher lows, and then wait for higher low to be created. And then it doesn't have to necessarily even go this high. It could just go, you know, somewhere like here, as long as a higher high is made, and then look for the higher low to try and get in long, right? So there are times where you do want to be, you know, try to catch a falling knife, depending on, you know, the value perspective, right? And where you're looking to obviously buy at value, you might, you know, cut yourself a few times, to use the analogy or the metaphor, but if you get it right, then you're pretty much buying at the cheapest, price, and this is where you're at the start and the beginning of a potential, trend to the upside. And I do think that the dollar is undervalued down here anyway, again, especially against the Swiss franc. But again, the Swiss franc being a beneficiary of the risk sentiment. So even though we had bullish news, if investors are worried still about global trade wars, then we could see some a sell-off again, Swiss franc strength. But trust me, when everything is risk on again, this is going to be the pair to buy for sure, right? Moving on to the dollar CAD. The dollar CAD, we've come up into this supply zone here, putting this nice outside candle. But at the moment, the CAD is suffering from some negative sentiment. Fundamentally, it's pretty decent, but against the the US dollar, do you really want to buy the CAD? Might not be the smartest idea when it comes to fundamentals. But again, if you just trade technicals, then this could be a potential short. And that's not to say that this won't be, this can't go down anytime soon. Just be aware that the dollar is the stronger of the two, so we'll be taking advantage of as more profit taking rather than increased Canadian dollar strength at the moment. So if you do want to be a buyer, then what you'd be looking for, two scenarios, is looking for a move all the way down before looking to potentially get long, right? Or you're going to be looking for get rid of this, right? What you're looking for is a move higher, as this is creating right higher lows and higher highs. Then this creates a higher high, then this would become your area that you'd want to be a buyer in, right, and taking advantage of the potential trend, right? So as if you want to get long, getting short right now is potentially a move that you may want to get involved in from a technical perspective, right? Nice bearish candle. You've got a bit of support, resistance in this area. If you kind of stretch it down where you've got resistance, bit of resistance and support right here, then you've got move off that level there, and it was against again a round number 1.32, so you could see some selling off this week as well, right? A potential pips, but don't know if I would hold that for any length of time unless we get some negative news about the dollar interest rates hiking, etc., right? Moving on to the New Zealand dollar, US dollar. And again, we did come down into this long term, there's some demand zone right here, but I'm always looking to get short, been short on this, currency pair for quite a few months. And we did get bullish price action. So there was an opportunity potentially to get long around here, but the move wasn't sustained. And we have this move pretty much coming down, and we could be taking out some stops and trend continuation, as traders would call it, price discovery to the downside. So I don't expect this level to hold, but if you do get some bullish price action, and again some negative sentiment, positive sentiment towards the US, say negative sentiment towards the US dollar, positive towards the New Zealand dollar, and you get potentially what would be a double bottom candlestick formation, then you may want to take a small position. Again, this is just purely a technical setup, right, as we are in this demand zone, but from again a fundamental and sentiment point of view, I'm going to continue to be short on the New Zealand dollar. So what we're waiting for, if we're looking to get short, is we'd wait for really a better move lower, and then this becomes a level of supply, right? And then you'd be looking for a move up, and then a continuation of the move. Now let's just double check to see if that was a bullish or bearish candle. Okay, brilliant, bearish candle. So yeah, you draw the supply zone from here to here, right? And then you'd be waiting for a pullback anywhere into this area here before looking for a short opportunity. Moving on to the pound dollar, and last week we did have this demand zone here, and we've come down in, and we've had bullish move on the pound, and this was really because of some news that came out that there could be potentially a better deal to be made in, for Brexit for the UK, and better negotiations between the UK, I think, and Germany. The chief negotiator for Europe coming out and pretty much saying that not all is bad, could potentially be a soft Brexit. And then obviously dollar strength kicks in. Now the pound, reading some articles, it's going to suffer from some volatility, so there's going to be ups and downs potentially in this pair, depending on obviously what new sentiment comes out and what the investors think about what's happening or potentially could happen with the agreement. So you saw some of it this week, and then fundamentals pretty much kicked in. So at the moment you've got, and I think I said last week that this potentially was a supply zone. It's not a textbook one, but it was definitely a supply zone, as we had basically this move right down. Not a textbook one, but and you can see it, prices did come up here. If we do create a lower low, then I'll be looking to definitely enter around this area here, right? And if we go down to a lower time frame, I'm not really a advocate of lower time frame supply, to be fair, but if you did want to get in short, then wait again. I would say probably for anywhere around here, so this 1.30 level round number between the highs, right, before looking to potentially get short. And if you're looking for a long trade, again, we've touched this demand zone once, so twice isn't bad at all, right? But when you get into 3 or 4 times, supply and demand gets weaker, right? So you want to pretty much just be aware of how many times this zone has been touched, right? And then you're looking at really the next level down, which is going to be around here from this long term. This was from 2017, this demand zone right here, and you can see how we've reacted off of it, right? And we could react off it again, right, the second time, if prices do come down this low. If this fails, then we'll be looking at this area here, which I definitely want to be a seller or a buyer of the US dollar against the British pound. Moving on to the pound yen. And again, last week we reacted off of this demand zone here. Again, that was just some bullish sentiment on the pound, but now we again are really in, and I'll put it here. This is going to be where your fresher area of supply is, and so if prices do come up into here, then this is where you want to be the first area to look for, being a seller. If not, this is your textbook area where you want to be a seller, right? Being a buyer, we've touched a few times, so you could see some price action moving up to the upside. Fundamentally, the pound is in a better position than the yen, but it's just obviously from a sentiment point of view, and with Brexit, you may want to be careful, as the yen will benefit from any uncertainty in surrounding Brexit. So maybe a short up until the negotiations are really kind of solidified would be maybe the best option. Not a financial advisor, but if you're trading from a fundamental perspective and sentiment perspective, then you can just stay out of this pair if you're not too sure. But moving on to the pound Swiss. The pound Swiss, again, we're down into this demand zone right here, getting a bit of, you know, support here, a bit of demand. So potentially, again, bullish news surrounding the pound. This is where you'd want to be a seller or get a short of the pound if you were looking to short. If you're looking to buy, sorry, if you're looking to buy the Swiss franc, yeah, and short the pound, then you'd be looking at these areas here. If you're looking to buy the pound right now and short the Swiss franc, then now would be the premium time, the optimum time to probably do so. But again, with the pound Swiss, it's not a currency pair that I'm actually looking to trade anytime soon. And even technically, from a technical perspective, it's just not great. Moving on to the euro dollar. Managed to get in short up here last week, took profit right pretty much at this demand low. We did get a pullback and again, bullish news regarding the dollar, you know, is sending, you know, prices slightly lower, but pushing prices again back into this demand zone. Will this demand zone hold? We won't know, right? But if we do get another pullback into, you know, an area where we want to be a buyer of the dollar, then this is where you want to get long. If you want to get long in the euro that right now, then this is going to be the first area to look to get potentially long. Look for some bullish price action. If prices fail, then you'll be looking at this area right here to get long, right? That's pretty much it on the euro dollar. Euro yen. So the euro yen, we have last week we came up into this zone here, and now we've created lower highs and lower lows. So what you want to do potentially is wait for prices to come up into this area before looking to get short, because we could be at the beginnings of a potential downtrend, right? So we know lower highs are areas where we want to potentially look to, you know, the best areas to buy and look to get short. If we're looking to get long, then what we would need is probably two scenarios to occur. Let's just delete these. Is either you're going to wait for prices to come all the way down to this low before looking to get long, bearing in mind we've touched it once as well, or what you'd be looking for is prices to really make higher highs, higher lows, and then look for a pullback into a higher low before looking to get long on that pair. So those are the options. Moving on to the euro pound. Euro pound, actually want to be a buyer of the euro. Didn't get a chance last week, so on the lower time frame. So potentially seeing how price action goes around this area. And we got, let's see, zoom out a little bit. Probably say, yeah, this area right here, and that's around 89 area. And then you've got another one, I think probably around a little bit around there, right? So potentially we could be seeing something around there. There's a little one above it as well. So I'd probably be preferring, if it does, prices do come a bit lower, right, for me to potentially get in long around here. Again, this is not, you know, financial advice or anything like that. But if you are looking to get long, these are the areas. You're looking to get short, then you're looking at trying to get short around this area here. So you wait for prices to really come up and then look for any shorting opportunities around this, just above this 0.9 level right here. Euro Swiss franc. I'm bullish on the Euro Swiss franc, but again, and I was actually in this from last week on the lower time frame, but we've just had some negative sentiment as well. The Swiss franc getting a bit stronger, so stopped out, but it's only one trade, managing my risk, so it's fine. So next level, obvious level, is going to be right here before looking to get long, or what we could potentially be seeing at the moment is a potential stop hunt, right? And how really the stop hunts work is traders will be placing their stops anywhere below this low, which is what I was doing. Takes out all the stops, and then what may happen is you will either get a move straight up, right, or you're going to get a move that does something like this, right? And then what we would do is look to get long as prices are creating higher highs, higher lows. We don't know whether it's a stop hunt yet, but depending on what price does, you know, this week and in the coming weeks, this could be a you know, stop hunt setup. If not, then pretty much just look for you know, prices to really just come down to you know, this area here. And I have a video which explains why I'm really trying to get long on the or short on the Swiss and long on the euro on this pair, and it's really to do with, you know, Swiss National Bank potential intervention as well. So I'm prepared to go in a few times because if this, you know, if I'm right about this trade in the coming, you know, weeks and months, then I'll be looking at a good few 100 pips, 400-500 pips, depending on you know, where we actually get in on. So I am bullish on this. If you're looking to get short, this is definitely going to be your area to try and get short on this currency pair. It's going to be the first area, and this is going to be the second area right here. So let's just get rid of some of these before moving on. So first area to get short, second area to get short. Moving on to the Euro Australian dollar. So last week there was a supply zone right here, and I was saying that I was very wary of this level. It's a decent level, but the reason why I was wary of it was simply because it had been touched several times in the past, right? You can go back to last week's video, you can see it's been touched once, twice, 3 times. So I wasn't too keen on it. And even though it put in this, you know, this you know, bearish pin bar candle stick, I was again just a bit, you know, wary of this level. I'm not, you know, I'm quite principled when it comes to levels touching, you know, more than 3-4 times, unless I'm really bullish on this currency pair. And even though I do, you know, I am bullish on the Australian dollar, it's been suffering from negative sentiment recently. But if you did take it, it was a decent setup, you know, when it came to supply. It's just that, and even the Australian news dollar, sorry, had some positive news as well. I think regarding GDP, but it's just the level itself was, like I said, had been touched a few times. So unfortunately, it just didn't work out this time. It could have worked out, right? Prices could have went to the short side. But I didn't get involved in this trade. It was an opportunity to get short, and I did advise that if you do, then just, you know, get in half or a quarter position. So, you know, it was worth a try. But the level that I'm actually probably looking to get short on is the one higher. So as we've kind of you know, come up into this level, right, anywhere now around here is where I'm going to be looking to potentially get short if I see the right type of price action, right? And I think a lot of people probably would be getting stop hunted right now. My own personal theory is that markets are manipulated to actually, you know, create pin bars, right? Or popular reversal candles, and you know, where traders will be entering and putting their you know, their stops above the highs, and they're only for their, you know, price to really kind of, you know, stop hunting them right here. So I'm not really an advocate for trading, you know, pin bars, unless I think the pin bar itself is an actual stop hunt, right? And this one potentially could have been, but it's just yeah, it was a bit too obvious for my liking. So if you did get short, not to worry, it's only one trade, we just move on. So here, this zone here between this 1.6, I would say 3 level, round number, to its 1.6, and again, we're just waiting for price action to kind of confirm if we want to get, you know, short within this area in the coming weeks and months. If you do want to take advantage of the trend strong move up, right, then you'd be waiting for probably prices to move slightly a bit higher, or maybe just now, and then look for anywhere in here. So if we go down to a lower time frame, you know, what you'd be looking for is probably something like, where's there some supporting evidence? I'd probably say somewhere like here, right around here, and then probably the lower end of this area here. And again, this is just a 244-hour chart. If you trade the 15 or the 30, this is what it would, you know, it would look like. So you'd be looking for potential pullbacks within the demand zone, and then you've got your supply, your horizontal support and resistance as potential confluence, right? Moving on to the Australian dollar, US dollar, and going back to the daily time frame. Again, the Australian dollar is a decent buy, but against the US dollar, I'm not so sure fundamentally. And plus, I think commodity currencies are really suffering when it comes to these trade wars, because everybody's thinking to themselves, if China is affected, right, then Australia being China's biggest trade partner, or vice versa, you know, the Australians export the most to, you know, China, and if the Chinese are going to buy less because they're affected by the trade tariffs, then it's obviously going to have a direct effect on the Australian currency. Now, even though the Australian currency is weak, it doesn't mean it's bad for the Australian economy, right? So a weak currency isn't always bad for an economy. In fact, a weak currency is great for exports. So we could see obviously some weakness in the Australian dollar, but again, once you know, things sort themselves out, then the Australian dollar, in my opinion, is definitely a buy. Whether it's a buy against the US dollar is something different. But if you do want to continue getting short, right, then you're looking at this area to try and look to get short. And again, this is what it looks like on a lower time frame chart. Be looking to try and take advantage of that daily supply zone there. If you're looking to buy, what I would say is look for some confirming price action, so higher highs and higher lows before looking to get long. So we could see something like this take place, where you have prices again maybe come up at some point, create higher highs, higher lows, and then look for, you know, because we need the market to kind of tell us that there is demand at an area, right? So you're looking for higher highs, higher lows, right, some other odds enhancers, and then look to potentially buy, right, at demand, because we know that here was a previous cheap level, considered cheap, or maybe considered cheap, right, and then we want to try and take advantage of that. But again, I'm going to be a buyer of the US dollar against the Australian dollar for the foreseeable future anyway, unless something, you know, fundamentally or sentiment changes with the dollar. Australia yen, so again, same thing with negative sentiment. So the yen really is benefiting from a risk off environment, right, coming down into this large demand zone here. I think last week I did have this area marked out where we've got some support, resistance, bit of support and resistance around here. So as we've come down in, we've actually, you know, touched here around the 79 level. And again, what I would probably say is wait for potential prices to do the same thing as the US dollar, right? Let the market create the demand first, right, before looking to potentially get, you know, long. And again, the first options would be to get long right here on a higher low, or if that doesn't work, then you'd be looking for prices to come down into the created, you know, lower demand zone before looking to get long, right? So let the market tell you where there is demand. Don't feel like you're missing out on, you know, a potential trade, even though prices go high, and say, oh, I knew I could have, you know, I knew I should have been a buyer there. Prices will come back for various reasons. And even if it don't come back, it doesn't matter. We've got plenty of other trades to take, right? So from a risk perspective, risk off, and I can't see the, you know, the tariffs really sorting themselves out anytime soon. So if you were looking to get short, take advantage of risk off sentiment, this would be the area. Supply would be the area to try and get short. And if you're looking to get long, I'd probably say just wait for, you know, demand to prove itself, and then try and get in long on any kind of pullbacks. So that's it for this week. If you do have any questions, you want me to go into a bit more detail regarding any currency pairs, just email me at info@trading180.com or leave a comment in the section below. If you liked, please like, subscribe, and again, just if you want to leave a comment, you know, positive, negative, make sure if it's negative, definitely be constructive, and I will always take it on board. And yeah, share if you can as well. There is a free fundamental analysis course. Again, the link is in the description box below if you want to know about fundamentals and sentiment and how I, you know, trade fundamentals and sentiment. I was taught by an ex-hedge fund trader, and quite a few years ago. And this is what he taught me regarding fundamentals and sentiment, and I've used it ever since in my trading, along with fundamentals. Along with technicals. So it gives me, you know, an extra edge and keeps me out of, you know, certain trades, as well as allowing me to hold trades for longer. So if you do want to, you know, take advantage of that, it's free. Just click on the link in the description box below. Now, I hope you have a great trading week. So take care. Have a great trading week. So if you'd like to receive the best supply and demand Forex levels absolutely free, click on the link in the description box below, enter your email address, and we'll send you the levels that we have just analyzed in this video. You'll get all of the major Forex currency pairs, and you'll get regular updates and never miss a Forex trading opportunity.